I have my coffee with me to signal that it's a policy breakfast series, meaning that you are also allowed to have breakfast. But the important thing is that you listen and you engage, so that you think. And we hope that you can, while receiving some input from our experts, also start the day with an intellectual click that will help you being as smart as possible during the rest of the day. As you've seen, today for us is the first policy breakfast series. We will dedicate these sessions to financing the EU Green Deal. 2 sessions this moment in June, and 2 sessions will follow for sure in September. Of course, each session will have its own topic, if you want, because the changing the finance and forcing them to go towards climate objective is a massive endeavor. We want to check different aspects of it. Today, we look mostly at the public investment from the side of the EIB, as well as from national promotional banks, with an understanding also of how they can do their best by working together. The talk today will be initiated by Stephany Griffith-Jones, that is a financial market director at Columbia University for the Initiative for Policy Dialogue. Stephany is also emeritus professor in a number of universities and has a track record of impressive publications on development economics, investment policy, finance. And we are extremely glad, Stephany, that you took the time to join us today. It's very early for you. And that you took the time as well to contribute to FEPS once more with a policy study exactly on the role of the EIB in the green transformation. So how also trying to check as well how the bank is changing to meet the new green challenges. But the discussion will also be made rich by Debora Revoltella, this not only the chief economist of the EIB, but also the director of the economics department, and by David DENZER-SPECK, that is the director of the KfW here in Brussels, so the liaison office to the EU. After that introduction, we will open to you so that you can give us input, comments, ask questions if you like. But I would like just to spend 1 second to mention what we will do next Wednesday, also at 8:45. Because we will go a little bit more into the resources. So where do we take the money? Resources for the green transition. And therefore, focus will be mostly on potential wealth tax and on the carbon border adjustment mechanism and ETS. Raphael Wildauer will present on the wealth tax. Jost Delbeke will instead present on the carbon border adjustment mechanism. Also, that talk will be also inspired partly to publications that FEPS has done in the last few months. And most importantly, we will have also a political check by one of the French economists that is also a member of the European Parliament, Aurore Laluc, that for the S&D group is the coordinator of all the taxation on resources and fiscal policy. But nothing more from me. It's time to go directly to Stephany Griffith-Jones. Stephany, thanks a lot. You have the floor, and about 10 minutes, I would say, while we are having coffee, but we listen to you, don't worry.
Thank you very much. And thank you very much to FEPS, to Laszlo and to David for commissioning the study and organizing this meeting. I'm very grateful also to the commentators. I couldn't have chosen better commentators. When I talk about development banks in other regions in Europe, I always give 2 examples. One is the EIB and the other is the KfW, as development banks that are doing well. So it's fantastic to have these commentators, and great also to have Debora, because she contributed actually to this paper in a long interview, a meeting we had. So the subject of the paper is the role of the EIB in the green transformation. And I start, you may change, with the fact that the needs for green transformation, as all people in the meeting know, are massive. The Commission had estimated them initially about 260 billion euros a year. Other estimates are much higher. Wildauer, who will be presenting next week, it goes up to over 800 billion annually, particularly now that there is a commitment to lower greenhouse gases by 55% by 2030. So there is a major need for investment. It's very valuable that the EIB has committed to align activities with Paris Agreement by the end of 2020. And I think very importantly, to ensure that 50% of its activities will be in green transformation by 2025, which I think is very valuable. And also the rest of the activities will be consistent with Paris. And it aims to mobilize $1 trillion of investment by 2030 for this purpose. And also valuable from the rest of the world is that the EIB is outside Europe on track to fulfill the commitment it had made to increase its share of climate action financing up to 35% to developing and emerging economies. So this is a very positive picture, particularly of intentions, of course. We have to monitor what happens, but it's a very clear roadmap. If I may have the next slide, please. The steps taken were agreed unanimously by the board of the EIB in late 2020 in the so-called climate roadmap. It's many important aspects, but I just highlight a few here. One is that it will ensure the use of the EU taxonomy guide for all EIB operations, which I think is very positive, and that it evaluates projects with a fairly high plus rapidly increasing shadow price of carbon. In fact, the EIB started using a shadow price of carbon over 10 years ago and very much pioneered this approach, which I think is really valuable, and it would be good if other regional development banks, but perhaps also national development banks, including European ones, but worldwide, could use this element of evaluating projects also with a shadow price of carbon. I find this a very interesting instrument, combined with commitments not to invest, for example, in fossil fuels. So just to give you a quick flavor of this, currently the EIB uses the shadow price of carbon of 30 euros per ton of carbon. It will go up, it's going up this year actually, to 80 by the end of 2021, to 250 in 2030, and to 800 by 2050. So it's a very high, ambitious, and rapidly rising price of carbon, which should affect the decisions quite drastically. At sectoral level, the EIB has adopted good policy on energy with a very strong commitment to renewables, plus a clear prohibition to finance expansion of fossil fuel capacity. It also, for example, is very good policy on airports. It doesn't fund expansion of airports, except in allowing better management of airports, greater efficiency, and greater greening of airports, but it doesn't expand or create new airports, which I think is a very positive step. If I may now turn to the next slide, please, David. So now I highlight some problematic aspects in this overall positive picture. And I should mention that some of the NGOs that are critical of the EIB have also accepted these points that I made earlier as positive, but they are pushing for further changes, which I think is a very positive situation, because I think there is a nice interaction between the NGOs and the EIB. And one of the points is that the EIB does not always consider alternative greener approaches like cleaner modes of transport to roads, because it's still in certain areas and with certain qualifications does still continue to finance expansion of roads. And I think particularly before low carbon competitive versions of cars materialize, electric vehicles, then it is problematic to continue financing roads. Though, of course, it's important to stress, on the other hand, that the EIB is planning to commit significant resources to support electromobility, plus, for example, green hydrogen, also for transport. And I think the latter point about supporting innovation, technological innovation, will be enhanced if the EIB and other institutions give really important resources to R&D and to support of high-risk companies for green, for frontier technologies like electromobility in cars. Less positive also, I think, is, and this is a complex area, is that climate action and environmental sustainability investments have thus far not been tracked in the EIF as they are in the EIB. And this is mainly because the EIF lends through financial intermediaries, and therefore the ability to monitor is more difficult, is more restricted. And I think this is a general problem for all development banks, including KfW and others. But I think it needs to be tackled because it's important, not just what the EIB lends directly, but also the indirect effect of transactions like the EIF, and more progress, although it's a difficult area, should be made on that, and more discussion. If I could have, did I finish? Sorry, can we just go back 1 second? Yeah, that's fine. Okay, next one, please. So some recommendations to finish. So the first point is that perhaps the EIB should move further from being a project taker, responding to demand from the private sector, which is important, I think, because the private sector may have very valuable initiatives, but also to be a project maker, helping creation of new markets and sectors. For example, green hydrogen. I mean, the EIB is doing this to a certain extent, but I think this more, if you like, supply-led approach, also called mission-oriented by people like Masukato, is very important, particularly because the needs of structural transformation are so large. And secondly, I think I would like to stress the fact that the EIB group needs to do more financing, a larger scale up, given that the investment required to meet the ambitious targets of the European Green Deal and the target reduction of 55% of greenhouse gas emissions by 2030 are very ambitious and very necessary, of course, because of the climate emergency. So if I could have the next slide, please, David. So therefore, I recommend, and I think that people in the EIB would tend to agree with this, including, as I understand, the president, that it would be desirable for member states to approve a significant increase of paid-in capital of EIB, perhaps thinking again of doubling the paid-in capital as they did in 2012. It's relatively very cheap in terms of the impact. So because of the leverage, typically, say, a leverage of 15, if you put in, say, 10 billion euros, you may have an impact of 150 billion euros of increased lending by EIB and private co-financers and national development banks. So I think this is one way which is important to increase the capital. Second way is additional resources should be provided by mechanisms like additional, I think, European Commission guarantees to allow the EIB group plus the national development banks to support greater economic risk-taking via, for example, thematic and quasi-equity and equity instruments, which tend to require higher requirements of capital. And so therefore, having these guarantees plus having more capital will allow the EIB to take more risk-taking, including in new technologies, new companies, new sectors. And I think this should be accompanied by the fact that this increased risk-taking should be taken in sectors where EU priorities for a green and a just transformation and recovery from COVID would be relevant. So not increased risk-taking in general, but increased risk-taking for these specific areas. Next slide, please. There is also, I think, the need to encourage others to pursue green path. Both national development banks and, of course, private financial intermediaries is valuable if the EIB incentivizes these intermediaries through whom and with whom they work to move as much and as quickly as possible to decarbonize their total portfolio. Certainly the portfolios with the money that is lent by the EIB, but go further beyond that. And I think that the positive influence, the moral suasion could be very important, also for those in developing countries. It's very important that the EIB uses appropriate financial instruments to maximize green development impact. It's not always, it's important to make profits and to avoid losses, of course, on average, but the main aim of development banks is to achieve green and inclusive development impact. And finally, I want to say a little bit about instruments, and particularly about the role of equity and quasi-equity instruments, which are needed for several reasons. And I learned a lot about this by reading Debora's work and that of the EIB. So there are several reasons why the role of equity is more necessary. We also had very interesting discussions with Laszlo about this and David. So the first reason related to the COVID situation is that companies are extremely indebted in the EU and worldwide. And so therefore, it's very important that more equity is injected into them, and the role that the EIB can play and others is very important. Secondly, from the perspective of the EIB, I think equity and quasi-equity instruments like venture capital have a valuable role because they are more direct instruments. They imply some more direct involvement, and therefore they are an instrument to channel funds better towards the aims of the European Union and of the EIB. And a brilliant example of this is which the EIB likes to quote, but very rightly, and very right to be proud of it, is the support that the EIB and the European Commission gave for the development of the BioNTech vaccine against COVID, which is now the BioNTech Pfizer vaccine, and which is perhaps the best one, and which is a typical contribution of sort of public financing for a key public good. But a third reason why it's important, I think, to have these mechanisms like equity, quasi-equity, and venture debt is that it allows the EIB not only to take additional risks, but also to share in the profits. Because it implies that if a company does very well, and BioNTech would be a good example, then part of those profits can be captured by the EIB, which then can use that money to increase further its capital or to subsidize new investment in new technologies. So I think there are three reasons why equity can be so valuable, but it's a bit unfortunate that some of the cutbacks on InvestEU that were introduced do not allow enough resources for doing this. And I think it's to be hoped that these resources can be found through other mechanisms, because I think it's very important to have this function of risk-taking. And complementary to the STEP, I think there is a strong case to create a European equity fund that would be probably housed in an institution like the EIB, most probably the EIB, and which could provide equity more generally throughout the European Union. Thank you very much, and I look forward to the comments.
Thank you, Stephany. I go directly to Debora Revoltella because we heard a lot about the EIB, a changing institution that is aligning with the new targets, with ambitions, but perhaps in view of the real big ambitions of becoming really sustainable and meeting climate targets, a little bit more is also needed. Debora, you have the floor.
Thank you very much, and thank you very much for inviting me, and thank you very much, Stephany, for a very nice report, which I like very much, not only because you are so positive on the EIB. I really like it. Was a very nice analysis, and I think it's very well documented. It shows that you really know well the European Investment Bank. I wanted to go in my remark, I just follow more or less your presentation, adding a couple of nuances that I think are important. You speak about the strong commitment of the EIB and the first move. I think it was particularly remarkable because it came, it was I don't speak about, I talk about the institution, but also was quite remarkable on the end of our president, that in a moment in which the previous US administration was not so much vocal on climate, and some of the other multilateral development banks were not allowed to be vocal on climate, he really tried to keep the flag high in terms of commitment on climate investment. And that was quite good to start this transition for the institutions. And I'm only talking about the internal transformation. And the transformation of the EIB is important because the EIB is a strange animal. It's not only international institutions, it's also a commercial banks. And as a commercial bank, we have to mimic our banking sector supervision. So we have a kind of a line to what is happening in terms of regulation of the financial sector. And then we are also a big issuer of bonds. So we have 3 layers of transformation which are important. And are important because by being also an institution, we are close to the decision making, and we can make the bridge between what does it mean, this transformation, coming from the institutional side, but also seeing the private sector implication. You were mentioning the roadmap. The roadmap is extremely important in this direction, I believe, because what it implies, various elements. If you think at the EIB as the lender, what it implied was that we contributed to build a taxonomy. The taxonomy is there. For a practical person, knowing what the taxonomy means is not so easy because you have various sectors. What can you do in this sector, etc. And how do you translate it in something that is business related? Can I lend to this kind of projects? It's very complicated. So for us internally, it took all of our project department and origination department to really go sector by sector, type of project by type of project, and build a realignment between our activities, what we can do, and what the taxonomy says. This is a huge process. In the private sector, I think it's really challenging for people that are not so much into the development of the taxonomy and then translate it in practical terms. The fact that we as an institution have been doing it, I think it's quite important because it set a basis for the private sector, at least to adopt something similar to our translation of the taxonomy. And that's quite remarkable, I think. The second point is as a bank. And as a bank, we also have to, as I was saying, we are subject to, it's a strange system. We basically have an internal committee that, the independent committee that plays the rule of the supervisors. But that means that as an institution, we aim at the best banking practice, and which all the regulatory side of the financial sector that is turning, asking banks to have a disclosure of their exposure to risk, asking them to start thinking about stress testing for climate issues. We have to do the same. So we are now in the phase of building our own, first of all, assessing our own portfolio for assessing the exposure to climate risk, operation by operation. And then we are building our own models. One example is we just built a model for countries' exposure to physical and transition risk, to climate risk. And this is because we are a bank, we need to do this, but then it's a way to show leadership versus the private sector of where the direction is. And the same in terms of sustainable bonds. I think we have been leading the process of sustainable bond development, and we are continuing to be on the forefront on that point of view. So the special nature of the EIB, being an institution, being a bank, being an issuer, helps bridging this gap between the regulatory side, the public sector side, and the private sector side. And I think it's quite important. In terms of what we can do more, I think you rightly pointed to something that we always say at the EIB, that we are not project promoters, we are project takers. And I think that when we talk about the climate transition, somehow we have to stretch a little bit. It happened already in the past, the stretching. We started already to do much more technical assistance and much more advisory in our projects. But in reality, what we see in the market is that if you, we were doing some, we do every year some surveys of European municipalities and firms. What we see is on the municipality point of view, there are huge needs. So the European municipality tell us they have a huge need of investment for climate mitigation and adaptation. If you ask the municipalities if they have inside their own administration capacity to deal with the green transition, you have 40% of municipalities that can. It means that 60%, they don't have people in their own administration that know what to do. So that means that if you want to turn around in the public sector at the local level, you really need also to combine the advisory part, otherwise it will not happen. The same happen with firms. Firms may be faster moving, but if you ask firms what are the main barriers to invest to deal with the climate transition, they will tell us finance, access to finance is one, but they will also tell you that, that the main barrier, the most important one, is uncertainty about regulation and taxation, and uncertainty about what can be considered eligible investments. So at the end, you have a lot of impediments that are not only related to the finance side, but to the regulatory context and the taxation context as well. So having clarity and adding more of the advisory role, I think it's incredibly important to really kickstart the transformation. You rightly pointed to, as one area of development, the fact that we don't monitor the climate component of our EIF investment. There is, we are actually starting to do so, but there is an element which is quite difficult to tackle with. And that's the part that is related to SME lending. So the problem is that while we start having a disclosure on the corporate point of view on their exposure to the various climate risk, on their investments, etc., on SME, the transparency on their own internal activities is not yet required, and will not even be required for some time. And probably it's not even reasonable to ask such detailed reporting to small and medium enterprises. But then for a portfolio approach, it's very difficult to say anything, because then if the SME doesn't know, you cannot know as a bank on what you have in the portfolio, unless you define portfolios that are very, very specific and restrictive. So a portfolio of only built with leasing companies, only having a certain kind of car. I don't know, think like that, but that's very restrictive in terms of what you can take there. So we have a work stream inside, and we are also working with the ECB and with other institutions to try to find a solution on how to deal with the SME issues. So the transparency issue of SMEs and then portfolios of SMEs. The other point, you were talking about the capital increase. I think as 1 minute, okay. You were talking about the capital increase. I think as an institution, we definitely have the ambition for that. I may look too negative, but I'm not sure that in this moment at the European level there would be policy support for that. And the main reason comes that at this moment in Europe, we have the big challenges of the deploying the next generation EU, which is already a very strong European mechanism to support the transformation of the economy. In the next couple of years, we will have a big push in this direction. I don't think that the member states are in the mindset in this moment for a further capital increase. We hope it could be different, but there is an important element that I would show. What the EIB showed, and we did it with the implementation of the Juncker plan. What the EIB did at the time was quite interesting, because of the whole impact that we had, 40% of the impact was due from spillovers across projects. So the fact that there was a big European program implemented, 40% of the results were associated to spillover, not to specific projects. And I think this is what we can do as an institution, having the full picture. Only national programs and Next Generation EU is coming up to be a sum of national program with very little cross-border dimension. You lose something. You know, something of the value added of the European side. But that's to think about for the future. And my final point on instrument. I think we have definitely. I support what you were saying on the equity type of product. I think we play a strong role on supporting innovation. We are technology neutral. We, as an institution, we refrain to pick too much technologies. We tend to be technology neutral. But there is one element which I wanted to point that Europe is not really well known, but at the crossroad between digitalization and green innovation, Europe actually has some niche of leadership, which is quite interesting because it's a small niche of work, but is extremely important for the climate transition. And a very strong point, I think, when we talk about what we can do to facilitate the transition, it's financial instruments, definitely, but again, the work in terms of advisory and technical assistance, and just the effect of imitation of what we as an institution, and it is an institution, but also a private, also a bank, just the imitation of what we do and using the knowledge that we developed in our own transition is something that would be really valuable for the market. And thank you very much. Sorry for taking too long.
I give the floor immediately to David. Colleagues and friends and participants to start using the chat either to ask your question or to ask the floor. But David, the floor to you, because KfW, together with the other national development banks, is actually responsible of bringing most of the European tools in the countries, and you're also changing institutions with new climate objectives.
Yeah.
What are your views?
Thanks, David, and thanks to the panel and to the participants. It's a very interesting and excellent study, and it touches on so many points that I really have to be careful to focus on the main ones. Very briefly on KfW, we are the National Promotional Bank of Germany. And we have a long history focusing on sustainable finance, and I think Stephany will possibly know better than myself where we are active and what we do. Just to cover some of the elements, we have a climate and environment quota around 30 to 40%. It changes year per year a little bit. Every second housing unit in Germany that is energy efficiently renovated or built is financed by KfW. Yeah, we are active in infrastructure. We have recently financed a new electricity line between Norway and Germany to balance out the fluctuations in renewables across Europe. And we are also a large issuer of green bonds, and we do a lot of policy work. And we are also in the middle, like EIB, of a big policy change, not in the way that we haven't been sustainable before, but that you have to change the bank to keep it on track with the overall policy targets. And this is a huge issue. Yeah. I would possibly stop here, and everyone who is interested is welcome to contact me or David, and I'm happy to provide all informations about KfW and energy efficiency, but I think that goes beyond the scope. On the study, for me, it was kind of two studies, one about equity gap in Europe and what to do about it, and one about Green Deal. I will only briefly touch upon equity and say that I totally share the analysis. We have in Germany, I think it was announced a couple of weeks ago, a so-called Zukunftsfund, which is translated future fund, which will provide 10 billion of public finance to venture capital, equity, and I think this is a very crucial element. And I have to say it goes, that the initiative started before COVID. Yeah. And the background was exactly this. We are lagged behind compared to America, compared to Israel in providing growth capital to enterprises. Yeah, where I would wish or ask for more clarity a little bit in the study is on the policy target, because it's different if you say I want growth capital. Yeah. I want fast-growing tech companies. Yeah, it's something that is not identical to I have an equity gap and I want to solve an equity gap on a European scale. Yeah, you need different instruments, and for me in the study it was not really clear: is the target to cope with COVID and the aftermath? Is it to provide growth capital to get the Silicon Valleys and the unicorns? Because in terms of instruments and policies, you really need different instruments to achieve those things. And I might mention we do have an EIF capital increase. So in terms of new instruments, I would always recommend look at the existing ones. I think EIF has an excellent record in providing equity capital on a European scale, and it's really a role model. So I would look at the ongoing capital increase and get more clarity on the policy targets and then decide what to do about it. On Green Deal and financing, I can only echo a little bit what Stephany has said and Debora, and I can really congratulate the EIB on its roadmap. Yeah, I think they were a front runner. Yeah, and I think you mentioned a couple of the critiques, which is also fair. Yeah, but looking at my own institution, I can only say it's a huge change process. Yeah. And you need to give institution times to get there. So if I take really a bird's eye view, I would say EIB is really more than on track, but is a front runner. Yeah, and for the remaining critique, give the institutions a little bit of time. They will get better step by step. Yeah. I can touch briefly up and indirectly, because one difference between EIB and KfW is we do a lot of indirect small-scale operations, particularly with SMEs. And I would say yes, it's possible, and we do that we make very specific programs targeted to get them energy efficient, to provide intelligent solution for them. Yeah. But you really have to be realistic. If you hand out a 50,000 euro loan, yeah, to a small company that is setting up operation and has thousands of problems, financing being just one of them, yeah, you cannot expect the same type of feedback with a 50 million project financing. Yeah, and I think we have to be honest about that. Yeah, and we have to keep a balance what we ask from our clients and what we give them. It's not a grant, it's a loan. Yeah, the people have thousands of problems. They might not have the information, and I have no answer how to. We have a couple of intelligent solutions for that. Yeah, but we really need to work more on that. But not only to praise, I want to end with one critique. Yeah, maybe also to kickstart a little bit the discussion. And this is on the policy recommendation. For me, the line between Green Deal needs a lot of investments. EIB is a big player in green financing, and EIB needs a capital increase is a little bit too simplistic, to be honest. Yeah. So I won't touch up on the question whether or not EIB needs a capital increase for many reasons. That could be a very valid point for regulatory reasons. Debora mentioned that we are actually banking regulated, so I can only share. It's very burdensome, it's very costly. Yeah. If the target is, as I understand the paper, how can we get done the Green Deal? Yeah, I would say the right perspective to look at it is to say we have a huge need of financing, and we have a lot of players who have to do that. Yeah, and I would take the perspective to say it's a kind of Team Europe approach, which we have outside Europe as well. Yeah, and you have a lot of national promotional banks, you have specific grant agencies, you have EIB, you have EBRD, and I think the task for the policymakers, the legislators and the governments, be it European or national, is to find the right instruments to get the job done. Yeah, and I think EIB has a big role to play in it. Yeah, but the task for a policymaker is different. You have to, if you allow me the football analogy, you have to set up the right team. Yeah, and EIB will be a prominent player, but not the only player. Yeah, and in terms of preparation for the game, yeah. I want to mention a capital increase is just one instrument. Yeah, what a capital increase will not allow you to do is to finance, for example, non-bankable projects. You won't get that with a capital increase. Yeah, so also if you look only at EIB, you really have to dig a little bit deeper and to see if the market gap is if the market gap is non-bankable projects. Yeah, then you really a capital increase won't be the solution. Yeah, and this is our lesson learned from the Juncker plan. We have to be, I think, the public financial sector, we have to do a kind of good expectation management. Yeah, first point for me is it won't fly without the private finance. Yeah, because the capital demand is much too high. If you look at the public finance, we have to have an intelligent concept, who is doing what, yeah, and who can do most effectively what, and then you cannot look at a single player alone. And for me, the right, on the European scale, the right institution to kind of set up a scheme would be, to be honest, the European Commission. I think they have to, together with the member states, they have a little bit to look to get everyone on board. And there I would end with the last point. I think they do this with InvestEU, for example, at the moment, which is a very interesting scheme. Yeah. But there again, expectation management is important. Sometimes the story goes, we can leverage without, give a little bit of public money and we will create a huge result. Yeah. And there I want to say my lessons learned from the Juncker plan was there are only a number of bankable projects that can commercially survive, yeah, and which are not financed by the private sector, yeah. And if you really look only at that niche, yeah, you cannot triple the engagement of public promotional banks. If you say I want to have non-bankable projects, yeah, then opportunities open up, yeah. But then you need a lot of more public support in terms of grants or guarantees, yeah. And yeah, there I would only leave you with the idea of please be careful with the expectations. Yeah, it will not be possible to get the green done only with financing. We need a lot of strict laws. Financing is only part of the solution. We need financing, yeah. But it's really a task for the whole financial system, and the private financial sector will have to play a big role. We need to have a good concept for the public financial sector, and there are limits what the public financial sector can do. And I think we have to be honest, what can be leveraged, yeah, and where are the boundaries where we need a lot of hard cash on the table to get things done. Thanks.
Thanks, David. That was very, very, very rich with some nice comments, some important suggestions. Perhaps also Stephany and Debora would like to respond, but I have one question. So I will give you the floor to Said El-Khadraoui, former member of the European Parliament, now special advisors at FEPS on the Green Deal.
Yeah, thank you, David, and thanks to Stephany, Debora, and David for this excellent discussion. I will be very short because we ran out of time already. But I just had a question, maybe to Debora, but others could join the discussion on the role of the EIB in the implementation of the national recovery plans. They have been presented. They are currently assessed by the Commission. We will soon hear more about that, and they will be adopted also soon by the Council. So are you in some way involved first in the design of some of these plans, and certainly also in the implementation, because the whole idea would be that the 750 billion money made available through the Next Generation EU should actually have a much bigger impact. Stephany emphasized very well the huge needs. It's in the hundreds of billions of extra money on a yearly basis. So the 750 will not be sufficient really to get there. So I think the EIB could play a role. Does it play a role? Maybe you could say a little bit more about that. Thank you.
Thank you, Said.
I think, yeah.
About 1 minute. Huh?
Yeah, we are working in the direction, and I think what we are doing, we are also looking at the national recovery plan. In some cases, we have offered to member states some advisory support in the design of the recovery plans, and actually we have a couple of countries in which this was actively and formally used, and many other countries in which this was informally used, the advice coming from the EIB. And I think we will just look with member state how to support them on the single programs they put in place. But the program is clearly a commission-led program, but we are trying to support the member state as they need it. If I may, can I react to something that David said also? In 30 seconds, so he was when he was talking about the implementation of this the program and how we move forwards. I agree with part of what he said. I also think that we may lose an opportunity. Part of the Recovery and Resilience Facility, which I think is a super program, is fantastic that we have it, etc. But a part of the lost opportunities if this is designed too much at the national level, and that's what's happening, in fact. So the spillovers among the different programs don't enter into play, and you risk to have a lot of money going in a country on something that at the end is not compatible with what the neighboring is doing. So having the full design for Europe and having the advantage for Europe is something that we may lose with a too much national focus program, even if it's a European finance. And that's where I think collaboration between national promotional bank and an institution like the EIB that is cross-national and going all over Europe can really play a difference. Because it's not only on the advisory point of view, but on the advisory, on the project design, project implementation, and also in taking the cross-border spillovers into consideration, which is something quite important, I believe. Thank you.
Thank you, Debora. I'll let you conclude with one minute of final remarks, maybe some responses, including a response to Ana Laura Gomez that in the chat is making the picture even more complex, because we are mentioning the collaboration between EIB and national development banks. She also brings in the EBRD correctly. So there's particularly active on transition countries, very active on climate as well. If we can also maybe say a couple of words of how the EIB and the EBRD are collaborating. Stephany, you are muted.
Very much, David, and thanks for the brilliant comments that we've had. Just one on Debora. She said, you know, we don't maybe need so much the capital increase because we have the big 700 billion package. I see it as a complement. So the EIB would support what the 700 billion package is doing, and the package would support what the EIB is doing. I think it's not so. This next generation package is fantastic. It's breaking lots of new ideas, including borrowing in a collective way, but it's not that big. I mean, if we compare it with the potential package of the Biden administration, it's not so big, and not such a high proportion is going for green projects. And I think we have to frame all this not as a critique of the institutions of the EIB or KfW, what they do, which is great and which is very impressive progress, but in terms of the climate emergency, that there is this terrible urgency that the planet cannot wait. And I don't say this as a slogan, but I think it's a reality. So therefore one has to evaluate it in these extraordinary circumstances. My second point is that a very interesting comments on the Invest EU. But for example, if you have projects that according to your shadow carbon price are profitable, but they're not profitable if you look at them commercially, then there may be a case, as David was hinting at, for greater support through grants or through guarantees. And I wonder how, we won't have time to discuss it, but how the EIB deals with those situations when there's a commercial project which is very socially valuable, because of the externalities on climate, but is not so commercially viable. And so there may be then a need for the Commission or others to step up. Totally agree that different institutions, including the private sector, have to do more. But I think the crucial role of the EIB and of the national development banks, I didn't talk enough about them, but I know the KfW has done fantastic work, does need to kickstart, to catalyze private investment. It's not trying to limit private investment, but it's how to join forces. And I think that's one thing that is very, very good in Europe. So yes, expectation management, but the problem is that we need high expectations given, as I said, the emergence. And perhaps if I may, one final point is, I think, which is a more general point for development banks, for public banks, is how, is there a trade-off between having to do things to support the post-COVID recovery of jobs and safeguarding companies and recovering of companies and being genuinely green? I mean, I have talked to some development banks and they say, yes, but of course we believe in this, to doing both, build back better and all that. But in practice, we have to save companies, we have to defend jobs. And one concern that I have is enough of the green aspect of the recovery being done, and what are the difficulties?
Thanks, Stephany. Thanks, Debora. Thanks, David. It was really interesting to start today with this important, I would say, not only important visions, because I see motivation in all of you to keep on doing as much as possible. So I'm glad that despite some differences, we all have big ambitions. I would like to thank all the participants as well, and invite all of you to stay tuned for next Wednesday morning for a chat on the new resources for the EU Green Deal. Thanks a lot. Enjoy the rest of the day and stay tuned.